Okay, Jerry Ngao joins us now live. He's the CEO of Eastwest Banking. So let's pick up on that, Jerry, on the interest rate differentials. We've heard from Fed Chief Jay Powell. We've also heard before him our own Bangko Sentral governor speaking about his openness to 75 basis point of a cut.
Thank you again, Kathy. Good morning, everyone, and thanks for having me. I think the move of the Fed is not totally unexpected. I think a monetary response to what is essentially a supply shock is probably suboptimal at this point in time. And I think they are probably well in his ground to basically hold back and see how things unfold. There's just so much uncertainty at this point in time that to do anything is probably going to be suboptimal. So I think that's probably the right stance to take at this point in time. In terms of the interest rate differential, I think what you've seen is despite the interest rate differentials being where they are, we've started to see the global weakening of the US dollar, which is probably more with regards to how the global economic system is being affected by political ramifications. So I think this is probably more than just the global financial transmission mechanism playing out with what's going on in the economics versus what's going on in the political sphere. I actually think this could potentially pose a Goldilocks moment for a country which is inward looking, consumption driven, like the Philippines.
Right.
I think what is very interesting is that this could be our moment.
I was just getting to that. The consumers, I mean, there's a lot more purchasing power with a stronger peso. So how would you describe consumers these days, given slower inflation, not seen since the last midterm election of 2019?
Well, I think the consumer story, particularly what's going on with the election campaign being with us, inflation being muted at this point in time, really the commodity prices being affected with what's going on with the tariff wars is actually benefiting the consumers. And I think what we've seen is that the consumer story continues to be robust. This is driven by underpinning fundamentals with regards to the demographic age of the country and our relative safety net because of the fact that we are, one, low in terms of the tariff that's being placed relative to the rest of the world. Our exposure to the US market seems to be relatively limited as well. And I think the two or three variables coming together provides a very good moment for the Philippines. So I think may it long last. No, I think what also Governor Remolona is saying, basically considering interest rate cuts for the Philippines, is also the right stance at this point in time. I think what you're seeing unfold before us is that the global synchronicity in terms of the financial transmission mechanism is probably starting to fray at the moment. And I think countries will have to find their own path on their own. And I think that's really good that we have a really independent central bank, which would also think about it in terms of what's good for the economy and where we are in terms of our economic development.
And that also puts you in a good place, just taking from the strong consumer theme, consumer banking, that business is so competitive, a space, as other banks have really been expanding their presence. So what are East-West strengths that can help guard against the intensifying competition?
The space has always been very competitive, hyper competitive. And in fact, most of the competition that's coming in right now, not just between banks, but also between the fintechs that are coming in, the non-bank financial institutions that are coming in. So it's a really, really vibrant space. But I think it's really what the country needs at this point in time. Have been for the longest time underbanked, underpenetrated in terms of what's available for the general population. What we've seen happen is financial inclusion expanding, and that's really good. That's really good that means that there are more people who are able to participate in the economy and not really just relegated to the top 10 or 20% of the population. So this is really good what's happening at this point in time. From our perspective, there's a lot of cooperation that we're doing with other banks as well as with the fintechs as well. Really, at the end of the day, I think that there is a time and a space where this entire demographic growth and consumption story can hold fairly well. Obviously, we will need to keep up the investments in terms of technology, in terms of capabilities, in terms of new products and services need to keep pace with the demand of the ever-growing, ever more competitive, but also demanding market, which is really good. It excites me.
I know. I can hear that and I can see it. So, what does that mean then for loan growth? What is your strategy for loans in the consumer space, especially with the increasing competition? Maybe say for teachers' loans, and how much do you see your loan book growing this year?
I think it's more a general salary loan. But I think what we've been doing is we're trying to keep loan growth at a steady pace. We're looking at around a mid-teens. I think loan growth, at least in my experience across the region, you do not do it in terms of start and stops, right? What's what gets you into trouble. What you really want to do is to be able to have a steady mid to high teens in terms of loan growth, coupled with capabilities and a focus on fundamentals in terms of cost to income ratio, lowering down the cost to acquisition, being more digital, putting more straight through processing, and so on. That's kind of how it should play out, right? At the end of the day, all these benefits should go back to our consumers. Basically, the hope, at least in East West Bank, is to look towards what I would call a risk-reward curve, where effectively new to bank, new to credit clients are given the opportunity to prove themselves and then lower that interest rate as the relationship expands. So we're looking at steady growth, steady relationship, and basically making that work for our end consumers.
And like you say, yeah, the Goldilocks moment there. Thank you so much for joining us, Jetting Ngo of Eastwest.